In this video, I show you how to become a profitable trader in 3 simple steps. Over the years, I've mentored hundreds of traders, and through the work with our Edgewonk trading journal, we have seen time and time again how traders make the progress from losing consistently to profitable trading. The first step is always clear. You need to make sure that you are able to trade your plan. You can have the best trading strategy, but if you are not able to execute the strategy and follow the rules, you will not make money long term. Second, you need to manage your losses. You can ask any professional trader and they will always tell you that risk management and position sizing is the #1 priority for all traders. And finally, the last step is working on getting larger winning trades. And a lot of struggling traders have problems with letting their winning trades run. And I will show you how to do this step by step. We're going to deep dive into the Edgewonk trading journal in a moment, and I will show you exactly how you can become a profitable trader. But first, let's address the question, what is a trading journal? And it doesn't matter which trading book you read or which podcast you listen to, you will always hear that a trading journal is a must-have tool for any trader. In a trading journal, you record your trades. In Edgewonk, you can very easily import your trades within seconds. Once your trades are in Edgewonk and in your trading journal, the trading journal will help you analyze every aspect of your trading. And then with the step number 3, you can start making adjustments to your trading approach based on the findings that your trading journal tells you. So you can find out what is working best, where are you losing money, and how to correct your approach to become a better trader. And that's then the ultimate goal of keeping a trading journal. Because only if a trading journal helps you trade better, it is worth having a trading journal. So as we said, step number 1 is that you need to stop breaking your trading rules. You can have a highly profitable trading system that you got from one of the best traders of all times, but if you are not able to execute the rules, if you're not able to handle the pressure of the live markets, then you will not make money long term. So the first step is always to start working on your discipline. You need to find out, when do you break your trading rules? Why do you break your trading rules? How much are you losing? You need constant reminders that you need to stay on track and that you need to trade at your best. And you need to be able to distinguish between what is making you money and where are you losing money consistently. And in Edgewonk, it's super simple. Once you have imported your trades, and it takes only a few seconds to import all of your trades automatically, this is how your journal will look like. The first thing that you can do is we go to the chart lab and then to the trade comments. And here we can analyze our trade entries. We see that when we take perfect entries and when we follow the rules, this trader is making the most amount of money. But when he's entering too late, he's making impulsive decisions, he's entering too early, or he's revenge trading, then he's losing money. Of course, most traders will have a rough sense that engaging in this negative trading behavior will lose money. If you see this black and white, and if you can really put a number behind how much you are losing money and how big of a difference this will make between your potential outcome, how much money you could make, and how much money you're always losing with the bad trading decisions that you just can't stop doing, this will lead to a shift in your trading behavior, and you're way more likely to start making good trading decisions and finally break the cycle of always mismanaging your trades. In the journal, we also have the tilt meter. The tilt meter shows you how well you are respecting your rules and following your trading plan. A green tilt meter shows that you have followed your trading rules. A red tilt meter shows that you have broken your trading rules. A cool thing that we can do is in the equity graph, we can overlay our tilt meter with our account development. In the background, we now see the tilt meter. And what we can see is that good trading, which means that the tilt meter is rising. This shows us that we are following our trading plan. The equity graph is also rising. This is a very typical correlation that you will see, that good trading decisions lead to more money. And here the tilt meter is falling and the trader is in a sideways break-even period. He is not making money and his account is growing only sideways. He's not being able to make money. Once he's able to recover and start making better trading decisions, his equity graph is also rising again. Seeing those correlations is super helpful, and it will give you a lot of confidence once you realize that when you are sticking to your trading plan and when you are following your trading rules, you are making money. The moment you deviate from your trading plan and when you break your trading rules, you are losing money. This correlation is so important to identify because it will give you so much confidence in your trading strategy once you see I just have to start trusting my trading strategy, and I should not doubt and second guess the rules and the signals that I get. Second, you need to work on managing your losses. How often have you been able to trade well for a week, maybe 2 weeks, and then there comes the one trade around where you completely lose it. You cannot take the loss, you let the loss get out of hand, you move your stop loss further away, you jump back in, you add to your position, and you take way too much risk. You need to stop doing this, and you need to find out how much you're actually losing by doing those negative and destructive trading decisions. In Edgewonk, it's super simple to find out. We go to our risk distribution, and here we see how well we are able to stick to our risk management plan. When you see outliers here on the left, it will show you that you have large losses, and those negative large losses, the further they are on the left, the worse the loss is. Here we can see we have one loss where we lost around 3%. This is much larger than our average loss. Our average loss is only minus 0.58%. So this loss alone is 6 to 7 times larger than our regular loss. In this journal, it doesn't look too bad. Of course, there are 2 very large outliers. However, we have also seen journals where you have outliers on the far left. And one of those big losses can easily wipe out 10 or 20 normal winning trades. And this is definitely something that needs to be avoided. And being able to put a number behind this is super helpful. When we go to our strategy lab, we can go to our simulator. And the simulator takes our current trading performance and then performs a future simulation of how your account can grow over the next 50, 100, 500 trades. In this case, the next 100 trades. And this is roughly what we can expect. The further apart the future simulated outcomes here, represented by the lines, the more uncertainty there is in your trading account. The closer together the lines, the better your overall risk management and the less uncertainty is there in your trading account. Currently, we have an R multiple of 1.26, which means that our average win is just slightly larger than our average loss. But what happens if we're able to boost our average gain? And let's assume we're able to manage our losses better and we realize slightly smaller losing trades. Now we're able to boost our R multiple. And if we now simulate it, you can see that now the future simulations point far more to the top right and the lines are much closer together. And this is a super helpful insight because it shows you that by just slightly improving your average gain, which means realizing larger winning trades, and I will show you in a moment how we work on our winners, and also reducing our average loss by making sure that we don't take large losses, we can boost our account development and our potential future trading outcome significantly. So use the simulator to play around and see how slight changes in your average gain and average loss will impact your potential future account development. And then finally, we need to start working on letting our winners run. I've seen so many traders that always doubt their trades, and once they're in a winning trade, they don't know how to handle this. They will often get out of winning trades way too soon because they are scared to let their winners run. And this is a huge problem because it will reduce your average winning trade. And as we have seen just a moment ago, the smaller your average win, the harder it is to make profits over the long term. And by being able to realize slightly larger winning trades, this can have a significant impact for your long-term trading career. In Edgewonk, we have a few ways how we can deal with that. First, we want to go to our trade management. And this analyzes how well you are sticking or following your trading plan and how well you're able to let your winners run. Here in the beginning, what we see is that the green line is the potential performance, how much money the trader could have made. And the blue line is the actual performance. So we see in the beginning, the trader could have potentially made more money than what he actually did. And this means that he is cutting his winners too soon. In some cases, it also means that the trader is pulling and trailing their stop loss too aggressively behind the profit and behind the price. And then he will be taken out by very short-term price movements before the price continues to the take profit. And this is super common for a lot of traders, and it's a big source of errors, and traders leave a lot of money on the table if they don't manage their winners optimally. In the second part, the trader corrected it, and here you can see the potential performance is below the actual performance. And this means that the trader is now making very good trading decisions when he is in a trade. So the trader, after seeing in the beginning that he could have made more money if he just followed his trading plans and didn't mess around and didn't second guess his trades, he was able to change the trading approach and then realize better trading results. And this is something that not a lot of traders realize, but once you're able to really see it in front of you with your own eyes based on your own trading data, that you just have to trust the system and that you just have to follow your rules, you could make more money. In some cases, we have even seen that losing traders in Edgewonk could have been profitable if they would just have followed their trading rules and not cut their winners. So this can make you a huge difference, and it can make the difference between losing and winning. The exit analysis graph in Edgewonk is also really helpful. It visualizes the price behavior during your trades. A green bar shows how much the price moved into your favor. A red bar shows how much the price moved against you on a given trade. The black marker here shows where you exit the trade. And the green line here is the take profit, the red line here is the stop loss. There are a few instances, such as this trade and this trade, where the price would have come very close to the take profit, but the trader exited the trade way too early, leaving a lot of money on the table. If you see that this is a common theme in your exit analysis, this should give you confidence that you can trust your system and that you need to let the trade run longer to get more money out of your trades. And this is such a helpful feature because it shows you exactly how the price is behaving during your trades, where you're taking your exit, and if there is more room for you to make more money. And of course, there's so much more for Edgewonk, and I will leave a link in the video description to our Edgewonk YouTube channel, where we also make a lot of videos on how to use Edgewonk, and we also show how other users use the Edgewonk trading journal. But what I've shown you in this video are some of the most helpful features and tools in Edgewonk that should help you make the next step in your trading. So if you don't have a trading journal yet, or if you don't have an efficient way of using your trading journal, make sure to check out Edgewonk, use the discount code Tradeciety as a Tradeciety follower and viewer, and you will get a special price.